Let's do it. We're here on Wednesday. Don't even know what the date is, but it's like
September 17th.
10:01. I can see by your watch, Jamie. We're here with Jamie Twiss, CEO of ASX-listed Beforepay, as well as Carrington Labs, a division of Beforepay. Jamie, how are you going?
I'm great, Chris. It's a pleasure to be here in Melbourne on what I believe is Wednesday, September 17th.
September 17th. You are very good at dates.
Yeah, see what I did there? I run a data company.
Do you?
Well, that's what Carrington Labs is, really.
Yes, yeah. So how would you describe the last year for Beforepay?
It's been a good year for us. So we're a publicly listed company, so anyone can take a look at our annual report and see how we went. But there are two sides to our business. One side is Beforepay, and that's our consumer lending business. We do that in Australia only, and that's where we offer a ethical short-term lending product that's designed to give people a better option if they only need a small amount of money for a short period of time. The other side of our business is, as you said, Carrington Labs, and that's where we resell a lot of our risk analytics capabilities on a software as a service basis to lenders around the world, mostly in North America, in the US and Canada. And listen, they've both had a very strong 12 months. So if you look at our year-over-year results, Beforepay, very strong top-line growth. Profit is up 74% to $6.7 million. So very strongly performing, profitable business. So we're writing about 40,000 loans a week with a team of 50 people. Net default rate of 1.1%. So I think we are absolutely at the top of our game in terms of how we lend to people. And the most important thing is that those are very affordably priced, very sustainable loans that help people out who need, again, a small amount of money for a short period of time. So I'm really pleased with how the lending business is performing. And then Carrington Labs, that's a newer business, but the origin of that was in order to make the lending business sustainable and profitable, we had to get really good at assessing the credit risk of people before we gave them a loan. And so we've got a lot of really high-end data science and predictive analytics models that we built for Beforepay that we realized actually that capability has much broader applicability. And so Carrington Labs offers that, again, on a software as a service basis to other lenders where we will create a custom model for them based on their data and then host that model and serve the results to it. We only launched that in 2024, but it's had a banger of a first year. So we've now announced 3 clients publicly, a number of distribution partnerships. So that's smaller, but it's growing very rapidly. Really pleased with how both sides of the business are going.
In 2025, there's a bit of a buzzword floating around, AI. What's going on with AI in your business?
Sorry, what does it stand
Artificial
for?
something.
Right.
I'm not too sure. But anyway, everyone's talking about, I thought it was a startup initially. People were like, oh, have you seen that AI?
Yeah.
I'm like, oh, geez, they're getting some funding, aren't they? Hey?
I thought it was maybe the NBA player Allen Iverson, but
That's right.
I guess it's something else. No, look,
Trivia question, which teams did you play for?
The 76ers.
He did, yes. And he also played a little stint at the Nuggets too.
Oh, right, okay.
During their...
I mean, Chris, I learn so much every time I come on this podcast. It really, I think of the calendar years as just gaps between doing a Chris Titley podcast.
Yes, look, it's, it's the highlight of the year, Jamie.
As for so many people.
Yes, AI. What's
AI. So I'd start by saying I think I'm enormously bullish on AI, and I say that because a lot of people listen to me talk about it. I gave a speech in New York at one of the big fintech conferences there last week on AI. People listen to me talk about it and think I'm very skeptical. I'm not skeptical at all. I think it's going to be enormously transformative. But in order to get to that transformative seed at the center of the apple, we're going to have to cut away an enormous amount of hot air and fluff and nonsense. And I look at the majority of AI announcements, and you realize that the people and companies making them don't even really understand what they're trying to say, and probably don't have a clear definition of AI. So if I think about kind of where we use AI, for example, and again, there are many different definitions, but I'll go with the common generative AI equals AI definition that many people use. We use it a lot in the upstream model creation process on the Carrington Labs side. We use it in selected areas around service. We do a lot of work around transaction categorization using kind of neural network-based models to tag and classify transactions, and it flows into our process in many different places. And I think in particular, because we are such a heavily automated business, again, a team of 50 people writing 40,000 loans a week, it's enormously powerful and helpful for us. But I think a lot of people are looking for a problem to which AI will be the solution, and that's a very poor way to go about using it. And I consistently have to tell people, AI it's a powerful tool, but one of our internal mottos is AI is the last resort. And what we mean by that is there are anything that you can truly automate, that you can clean up and put it in code and do something deterministic and reliable and quick and affordable, that's the right way to do it. And then AI gives you a tool to fill the gap between what humans do and what you can truly automate. And I think without that kind of fundamental understanding and framing, a lot of folks are pouring a lot of money down into areas that it just doesn't make sense to use AI. You should not be using AI to help your staff navigate your horribly written and overlapping and duplicative policies, as a number of organizations have proudly announced they're doing. You should not be using AI in any kind of highly repeatable templated process like, many back office tasks like loan origination and processing. You should do those with code. And so I think we're still a couple of years in a big AI shakeout when people realize that actually it's a powerful tool but needs to be deployed in the right way, and then kind of get their head around what to do with it. Once we do that, of course, I think the sky's the limit. I am, again, enormously bullish.
Speaking about sky's the limit, the company itself is profitable now. Has been for a bit.
Yeah, a couple
and
of
you had
years
some
now.
quarterly updates, and then all of a sudden you're not doing quarterlies anymore, are you? Because
No, we still do quarterlies because
why
there's so many great things about being a listed company, but the chance to do lots of public reporting of your financials 6 times a year, in fact, is definitely one of the highlights.
When are you going to get relief from being profitable?
Relief from being profitable is sort of a strange phrase.
Well, relief from the 4 Cs, right?
Right. Well, that's a different question.
So when are you going to?
So, in all seriousness, I do think that although it does feel like you're on a treadmill with public results as a listed company, because you are, I actually genuinely enjoy the accountability it gives you. I think everybody talks about how the market is very short term, and there's an element of that, but the long term ultimately is just a succession of short terms. So if you can't deliver good results, in a quarter or the quarter after that, then maybe you're just fooling yourself and you're just offended that the market doesn't believe your nonsense story. So I actually don't, although there's still work around it, I actually don't mind that transparency and accountability.
And the focus on profitability from a loss-making business to now spinning out some money. Do you want to talk about that cycle and where you're at now as a business?
Yeah, so I think it's been an interesting few years in fintech. So as most people know, 2021 was probably the peak, and there was a lot of excitement, there was a lot of funding availability. And I think we had our IPO, our initial public offering, in January of 2022. So right as that boom time was coming to a close. And when we were headed towards that IPO, we thought we'd be like many other fintechs then, and indeed now, which was, we'll raise a bunch of money, we'll spend it, we'll raise, we'll spend, we'll raise, we'll spend, and then eventually something magical will happen. And what in fact happened, of course, was after our IPO in January 2022, the market was already sliding by then and really fell apart. And our share price fell pretty dramatically, as did everybody's. And I think it was very clear to us very quickly that we were not going to go through this raise and burn cycle. And so we pulled a hard handbrake turn on cost. We said, look, we're not going to do anything fancy, anything clever. We're not going to be going offshore. We're not going to launch all sorts of fun new stuff. We're just going to relentlessly grind away towards profitability. And so I think we were quick to recognize the world had changed, and I think indeed we beat a lot of others to the punch and saved a lot of money by recognizing that change very quickly. Our strategy for profitability was very simple. We had negative unit economics at the time, and of course we had significant overheads as well. So we said, look, let's absolutely focus on delivering positive unit economics. Let's be ruthless on overhead costs. and then let's grow into our cost base. And that's exactly what we did. So we went from a negative, what we call net transaction margin, that's essentially the unit contribution of a loan, to our target range of 2 to 3% over the course of the next couple of years. We held headcount very flat. So when I joined, we had 30-ish people writing a smaller number of loans, and we grew the top line more than 5 times with essentially the same number of people. So a lot of people say they have a software business and it's fixed cost, but then their costs grow in line with their revenues, and we actually reduced cost. We're still spending less money on overheads every month than we were at the time of the IPO, and we were just a tiny fraction of our current size. And then indeed you do grow into your cost base and become profitable. So it sounds easy when I say it. Obviously it was a significant piece of work to get to that, but I think the fact that we've done that, the fact that we haven't had to raise more money following the IPO, the fact that we have first world problem, but if anything, too much cash on the balance sheet right now, I think that's given us a tremendous amount of strategic and operational flexibility. So I think the hard work was absolutely worth it.
Jamie, what are you looking to get out of the next couple of days here at Intersekt?
So Intersekt is always a great opportunity to see old friends, make new friends, see old enemies and make new ones as well.
You're a nice guy. You don't.
I am a nice guy. I don't really have any.
I only have nice guys and girls on my podcast. I don't have anyone that's.
They say judge a person by their enemies, and I always wonder what that says about me. So I am hoping to make some. So if anybody out there listening would like to be my enemy, please get in touch. I'd be grateful. No, but Intersekt is a great opportunity to see people, meet new people, and then it does give you a sense, not necessarily about what the absolute latest innovation is, because often that's still below the radar, even of a fintech-oriented event like Intersekt. But you can definitely feel what the mood is, what people are thinking about, talking about, what are people's priorities, and I think that's, you never want to be overly guided by that. You want to stay away. We're always very careful to make sure we're not just going along with things because everybody else thinks that. But it is informative to have a sense of where the zeitgeist is going.
I agree. I think 4 years ago it was buy now, pay later. 3 years ago it was digital banks. 2 years ago it was open banking. Last year I can't really recall what the theme might have been.
It's probably AI again.
AI again,
yeah.
and this year we haven't discovered it because we're just here now.
Yeah.
So we've got to go out there and get
my early money is on AI. And then I'm really waiting for the Mark Zuckerberg metaverse to make a big comeback. So
what happened to the metaverse?
Well, I think it all fell apart when the Mark Zuckerberg avatar got legs. That's a bit of
and then when Square changed its name to Block, it was all about the blockchain.
Yes.
And digital currencies are obviously very strong, but not many people talking about the blockchain.
I think the blockchain is another one of those classic
like an underdog
looking for a problem. Yeah.
It'll rear its head in about 8 years' time.
Exactly.
What happened to that blockchain thing?
Exactly. I think crypto is having its moment, and I think stable coins, which sort of sit between the traditional wildly speculative crypto and the much more sober blockchain, they're sort of in the middle of that spectrum. They seem to be having their moment, and it'll be interesting to see if anybody comes up with something useful.
It's a stable market at the moment for the stable coins, eh?
Yeah, and the good thing is when you talk about stability in crypto land, it's a very low bar to consider something stable. If no one is in jail, it's stable.
Jamie, always great to have a chat. Thanks so much for coming and have a chat today.
It's great to be here. Thanks, Chris.